Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Mary Ann Miller. She's Vice President and Evangelist and Fraud Executive Advisor at Prove, as well as Phil Kwok, CEO of EasyA. We're here to discuss the role of stablecoins, risk management strategies, and evolving market structure. It is great to have the both of you with us. Welcome to Trade Talks. Mary Ann, let's kick it off with you. Let's talk about the stablecoin megatrend. What is fueling its growth?
Yeah, Jill, it's just, I think what it's really doing is upending payments just generally. So we're seeing lots of different use cases, B2B use cases. We're seeing use cases in easy programmability. I just read the other day where stablecoins can launch in just a few days. So I think that, we're seeing actually the use cases that, the volumes are in the trillions. I heard one quote of $27 trillion in actual volume. I'm sure it's more by now. So we really have a lot of usability of this new way of moving money.
Yeah. Phil, let's talk about some of the real world applications where stablecoins are already having an impact. Give us some of those use cases.
There's tons. We've moved vastly on from where stablecoins started off their lives, which was purely in trading. Trading as a way to essentially take profits when you have a lot of volatile assets. So, for example, if we're looking at Bitcoin or Ethereum or XRP, it was a way to take out profits. Now, what we have had this whole DeFi revolution where you actually now have, number one, you have payments. So payments across the world, cross-border, absolutely massive use case. We've spent a lot of time in Asia recently, and there are literally prices in some places that are quoted in USDT or USDC. And now we're seeing that ripple across the board. So we're seeing payments, trading, we're seeing a lot of DeFi, people able to earn savings on their stable coins. Essentially, it's the rebuild of this whole economy, but fully on-chain.
So Phil, let me follow up to that for a moment here. What are some of the key advantages of using stablecoins over traditional fiat or other types of crypto?
That's a great question. Number one is this cheapness with which you can transfer. So, for example, if you transfer a stable coin like RLUSD, which is issued by Ripple, then on the XRP ledger, you can transfer that for literally fractions of a cent. Super fast and super cheap as well. When we look at the cost of a wire transfer, I'll give you an example. We recently ran a prize competition for our community, and some of the prizes were very, very small, just as guaranteed prizes. We sent $10 to one participant. It actually cost her $5 to receive it because that was the price. It was a $15 wire transfer. So she actually lost $5 because we sent her 10. So absolutely insane. That's just one example of how stablecoins are making it a lot faster and a lot cheaper to receive and send payments.
Yeah. And Mary Ann, we know that there's a lot of potential here, but let's talk about some of the risk or fraud patterns that you're starting to see emerge.
Yeah, so the fraud patterns are not unlike what we see in financial services in general. So we're seeing strains in identity proofing, where we have failures in KYC processes, authentication. Certainly, those processes are under strain, and fraud as well, just from a transaction monitoring standpoint. So really, anytime you look at something new, something that has speed associated with it, something that has popularity associated with it, you'll find more financial crime. Just generally, the bad actors just go to those places.
Yeah, and Phil, I'll ask the same question of you as well. Some of the fraud that is more prevalent in the stablecoin and DeFi space.
I think there's a couple of different types. I think that early on, what we saw is there was potentially fraud in the actual stablecoins themselves, those who issued them. So the lack of backing. We see this in the big ones that you've heard about. We see it, for example, in Terra Luna, where there was some perhaps fraudulent activity, we'd say, going on with that, right? Essentially, people didn't know exactly what they were buying into. It wasn't fully backed by maybe the dollars that people might have been expecting. Even some allegedly fiat-backed stable coins, even to this day, don't necessarily have full audits. And so I would say there's that side. Then there's also what people are using it for Of course, if you have a system where people don't need to KYC and they are fully interacting within this sort of permissionless ecosystem, that's great for some things, but it's also not great for others. And one of those, as Marianne just mentioned, is of course the opportunity for fraud to arise in the sense of even money laundering or those sorts of risks. But I would emphasize that whilst this is something which has blown up and people talk about a lot, it's still that the majority of transactions within this system are legitimate, and it's just that since this is such a new system, as Marianne mentioned, there's a lot to be done in terms of actually, monitoring and also setting in place the systems to monitor that sort of illicit activity.
Right. And Marianne, you bring up a great point in your notes that some of the challenges lie in traditional risk management systems. Give us some examples of that.
Yeah, you'll have siloed systems, so systems that aren't working together. That really creates a challenge. So that technology needs to bring like a cross-channel view or a more combined view. You've got challenges around KYC. I mean, our PII is out there; it's been data breached. So really, understanding if Marianne Miller is actually, engaged in this actual transaction is really an important aspect. So to really understand, is she there, or is it just her information that's being presented, or is she actually presenting her own information in the flow? And then there's just the speed. I think that Phil, when we were talking about the transactions, if the volume's in the trillions, the fraud's in the billions. So that's we really it is relative to the size of the actual money movement, but we really need to I think look for additional frameworks and tailored systems that are tailored to identity, tailored to authentication, and tailored to fraud that really meet this use case of stablecoins.
Well, Marianne, let's continue that conversation and see how you can leverage emerging technologies such as AI. What is the role that it could potentially play in risk management in the stablecoin space?
Yes, that's the beauty of this, Jill, is bringing together AI and stablecoins. It's kind of like a convergence all of a sudden. So AI is not new in the fraud and risk space. It's been around for a while. Since the late 90s, we saw it for credit card fraud and transactions, which were in real time. So we saw an early form of AI back then. But now we're seeing AI that can be applied across the board when it comes to really fraud management, identity management, and authentication. So AI can be used for transaction monitoring, so understanding and pattern recognition and understanding patterns. And when you see something that's not normal for that customer, that certainly could be called out. We're seeing AI in resolution of cases that might be maybe a stablecoin transaction that's paused or interdicted just for a moment to see whether it's fraud or illicit activity. Certainly AI could be helped to resolve that and work with the customer to understand what's happening in that payment. So we're seeing even AI can be used if the customer needs to present documents to actually prove their identity. We have AI that's being used to understand the authenticity of those documents, so whether authentic or not.
Yeah. And Phil, you can also use machine learning as another example to test some of these scenarios. And when you think about what the future of AI-powered governance looks like going forward, what do you think a framework could potentially be structured like?
That's a really good point. It's very top of mind. This is actually something that we were discussing. We were recently at the SEC's crypto roundtable the other week, and I can't discuss exactly the specifics of the conversation, but a lot of it was centered around how do we actually identify risk. And when you look at blockchain and governance, I think in previous cycles we did have a lot of this sort of very sort of idealistic DAO type of modeling. Now what we're seeing DAOs go towards is we've realized that having everything as a DAO and that sort of governance isn't necessarily the best way forwards. There's a lot of politics involved and it's hard to make decisions. What we've seen come to the fore today in 2025 is DAOs setting the risk and having committees of risk. And when you talk about machine learning, Jill, that's one of the areas where we're looking at, as an ecosystem, we can see exactly what's happened on the different regime changes when crypto markets turn one way or another. And so I think for those particular aspects, machine learning, when we're running these regressions across these different risk analyses, is very, very important. For example, we see it in some of the major DeFi protocols to see what should we do in this particular situation and how quickly can we react. And that's a lot faster than doing some of these things, and a lot also more accurate than doing a lot of these things in the way that they might have been done sort of just on a whim, just through a couple of people just making some decisions.
Yeah, and Marianne, lessons can be learned from financial services and e-commerce platforms as well. Sometimes it's not always necessary to reinvent the wheel when you can apply some of these structures that have been in place for years to newer technologies or new types of payment systems or crypto. What can you apply from, let's call it TradFi, right, into some of these newer technologies?
Yeah, the really important part is all about the data. So back to Phil's point around machine learning, it's the data that we need, the right kind of data that we have, to make sure that data is in real time, to make sure that data has good standards around that data, so that we can actually use the AI and we can actually use machine learning to be efficient. So those kind of standards and those kind of techniques have been around for a long time. So those are things we can use now. That's what, and the ability to actually adjust your models and launch your models very quickly is very important. Rebuild, test and learn, and be able to get those models out there quickly. So those are processes we can use now. There's also processes in identity that are new. There's new modernizations. You can use your phone as a proxy for your identity. So those signals that come from your phone can really help understand if that's really Marianne behind a transaction. So I would encourage anyone launching a stablecoin to really look at what we have today to leverage, because there really is because of leaning off of all the faster payment initiatives prior to stablecoins can really you can really leverage those best practices.
Yeah, and Phil, I would argue, regardless of what industry, business unit, role you play within an enterprise, it's going to come back to governance regardless of the product, right? So if you want scale, you want security, you want a resilient model and ecosystem, and policy enforcement from the top down, it's going to just make you more competitive in the overall landscape. I mean, I feel like some of these governance principles should apply across the board to a certain extent.
Yeah, I agree. I do think that there are some principles which are as old as time, right? Exactly for the reasons that you mentioned. My original background before I got back into crypto started off in crypto in 2013. It was very anarchical. A lot of people were like, this is going to be a completely different system. This is going to be something which is going to usurp all of the current systems. And then, I became an attorney in New York, came back to crypto afterwards. And I think at this point in 2025, what we have as a system and what we have as an ecosystem is more along the lines of we've got to work with what we already have. And I think Chris Larson of Ripple put it really nicely. He said that every technological revolution hasn't necessarily completely reinvented the wheel. It's built off the back of what's come before. And so I think precisely to your point, yes, we have new tech. We have new technologies, we have stablecoins, we have AI, but at the same time, there are certain principles which are tried and tested, and we've got to build on, even though we have these new technologies available to us.
Yeah, and I would agree with you, Phil, because at the end of the day, if you want institutional adoption, right, beyond retail and the original ethos of digital assets in the financial services space, it's heavily regulated. There's no way that you're going to get around that. So I think us versus them versus, okay, let's integrate and find out how we can push this technology forward through scale and have the appropriate frameworks in. I think that legitimizes, the next iteration of what finance and global capital markets could look like.
Precisely. I remember over 10 years ago, I was just sitting in my basement, sort of with a tin, or not quite with a tinfoil hat on, but really just everybody was very, very anon, and everybody was very Puritan in that respect. But I think what most people have come to realize is that actually by working together and working together with institutions, that's how we can actually bring this product to the masses, as opposed to it remaining as one niche product which is enjoyed, or sort of a lot of scholars, let's say DeFi scholars or blockchain scholars, just appreciate as a sort of art form of technology.
Yeah, Marianne, I would also argue too that we tend to think very US or Western centric in terms of here's the value of a digital asset, here's how I can hedge, here's how I can trade, but the underlying technology is what's helping to grow micro local economies, alternative forms of capital formation, allowing people around the world to have direct access into our treasuries or markets, as an example. So when you think about it, not so short term what it's worth, but longer term as an infrastructure and circular economic play, I think you could get some support behind that.
Yeah, I think of it like a mega trend. So I think about early digitization of payments, and then we had the internet that was combined with the internet. Then we had mobile come on the scene, and that really helped globally people able to move money and have a commerce that was faster and quicker and more accessible. And now, I look at stablecoins as being part of another mega trend. And during those mega trends, I think that, yeah, we can learn from things that we know now and leverage best practices and lessons learned from what we know now. But I also think there's a little bit of forgetting what we know and think about it through fresh eyes. Because I think we needed to do that when we were building the internet. We needed to do that when we were working and using mobile payments, mobile interactions, mobile apps. So I think that's the same for stablecoins. I think it's really thinking through fresh eyes, especially with AI.
I agree. I mean, I'd love to add to that, Marianne. I think you're absolutely right in terms of the way that we see these technologies progress. I think one of the clearest ways that this was distilled for me was actually the way that Ripple put it in the Ripple Primer. This was way, way back. But it was that there's this idea that the internet has made the transfer of information virtually cost-free. You can go on Google and you can look anything up. We can be live streaming this right now, and anybody can get that completely for free. But the transfer of value is not free by any means. We talked just earlier about us sending that wire transfer, $15. The person we were sending it to literally is $5 worse off, even though we sent $10. How is that even possible? It's almost insane. And when you're looking at international wire transfers, it's so much bigger, right? It's such a bigger problem. This is about making the transfer of value free or virtually free. That's what we can do with these new technologies, with these new blockchains, with the XRP ledger, with other blockchains as well. It is something which is so important. I think we vastly underestimate the impact which making the transfer of value virtually free is going to have on the world.
Yeah. Well, actually, let me add on to your point as well, Phil. When we talk about things being free, we do have to recognize that our data is the commodity, and it goes back to both of your points why it's critical to have a governance structure in place in order for these technologies to be adopted and to move this forward. So compelling points by the both of you. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much for having us on.
Thank you, Jill.